hundreds of others, falsely accused in a panic that swept the country. From Gimlet, Conviction American Panic is out now. Tap now to listen for free on Spotify.
Thanks for listening to Spotify. No, really. You could have listened to the radio. You could have spun some vinyl. You could have played a cassette tape. You could have listened to an 8-track tape. If you knew what an 8-track tape looked like. But you listened to Spotify. Thanks for that. And you still have hundreds more playlists to enjoy.
That may not have the same level of testing, but I am pretty confident in New York City and in New Jersey and places that have these large outbreaks.
What's even better than having millions of songs at your fingertips for free? Getting thousands of the world's most loved podcasts in your earbuds too. On Spotify, you can listen to shows from the worlds of comedy, politics, entertainment, sports, business, cats, the business of cats who love sports. Just about anything your heart desires. Whatever your niche, Spotify has podcasts for you. Tap the banner to check out what's streaming right now.
Hey, baby, how you doing? Come on in here. Got some hot chocolate in the stove waiting for you. But listen, first things first, let me hang up that coat. Yeah, how's your day today? Did you miss me? Yeah, you did. Yeah, I missed you too. I missed you so much I followed you today.
Crosses on wooden doors. If you flow, you burn. Loose talk around tables. Abandon all reason. Avoid all eye contact.
Hey, what's going on, everybody? Happy Tuesday, day whatever it is of quarantine life. Let's get right into it. Listen, when you got time on your hands, this is the stuff you do, bro. All right, so let's get into it. We'll do our thing, and yeah, I know Julio's already thrown a chart in the chat here. If you guys are looking at something, throw it in. We'll take a look at it. I'm looking at a couple things for tonight and tomorrow, and then kind of give you my outlook on what I'm looking for the rest of the week. Before we do it, let's get into Forex Factor and check out the news. Right. Obviously, I'm looking in for a lot of U.S. dollar movement going into Wednesday, Thursday, Friday. The big, let's see, personally looking at, of course, is the right here, the unemployment claims. So, you know, you could see already that they're calling for 5 million is the forecast. We came in at 6.6 last week. And obviously this number is just going to keep climbing. So I'm very eager to see what that number is. And if it is, it's going to go with my bias of the dollar index depreciating as well as the indices. Take a look exactly how last week and the week before played out on the unemployment claims, and then we'll go from there. But that's the big thing that I'm looking for is this Thursday unemployment claims. And then really, I mean, Friday, I'm going to be done trading pretty much, but CPI report, I mean, obviously this stuff's going to be negative. I mean, they're already calling for a negative 0.3%. So the market's already, pricing in that stuff, but I think this is the one that's really going to move it. And then of course, Canadian pairs are going to have their NFP as well, their unemployment rate, which is going to be, wow, that's crazy. They're projecting 7.4% unemployment for Canada. And if you remember last week's NFP, we came in at 4.4. So that's crazy that Canada is anticipating a 7.4%. But really, that's all I'm looking at. Last night, the odd cash rate didn't change, really not a lot of movement. I was kind of really hoping we were going to get a nice little candle down and get us into that AJ buy, but it left without us. So that's really all I'm looking at. Thursday, though, anyone that's trading oil, I'm personally staying out of oil just because there's really, it's not following any structure. So I'm kind of staying out of oil, and because of oil, I'm kind of staying away from the Canadian dollar. Look for oil markets on Thursday. If obviously if they come to an agreement to cut production, we are going to see a huge spike like we did last week going into oil. All right. Let me hopefully I'm going to open up. Go over is I'm going to go over this S&P and this US 30 trade that we took. If you were on bounce back this morning, I'm going to break it down, really show what the confirmations were and how we got into it. All right, bear with me here. I'm going to send this chart, or I'm going to open up this chart real quick. I personally was looking for US 30. I was looking to sell it down or give some sort of movement down. And if we broke structure, I was going to catch a retest and break it and take it down further. But I was looking for that pullback into this area here this morning. And it gave us that and then some. I did not buy it up. It invalidated my my trade idea. But if you've been following what I've been sending out in the chat in the trade group, I've been very taking the indices any higher. I think we are going to start to see them come down, but I'm going to break it down real quick. So give real quick if you have any questions about it. Today, I just stayed with US 30 and the S&P. All right. What I do want to show is, let's just break it down, right? So on the created a bottom here, or what people are thinking is the bottom. All right. I personally think we are going to come back down. But on a daily time frame, you can see how we closed today, right? We closed on a Dragonfly Doji. Of confirmations that we are going to go further down. All right. We did stay in a range. Further down. But when you look at the 4 hour, right? Once we broke this area right here, I was looking to take it up further. Let's do this. Hold on.
All right. How's that? Is that a whole lot better? Let me know. All right, perfect. Yeah, yeah. Sorry, I was on my AirPods. I guess they were dying. No worries, man. All right, so let's start over real quick. So on a daily time frame, right? You can see how we closed up. We closed up on a doji, right? Dragonfly doji. Price action wise, it tells us there's a lot of selling pressure. All right, a lot of selling pressure coming in. You know, you can see we ultimately stayed in a range for, you know, almost 2 weeks, right? 13 days we stayed in a range. To me, what that was doing was, and again, you know, I was talking about it in the chats, you know, we are just building liquidity, right? Building a ton of liquidity. There's a lot of sell orders that were up here, a lot of buy orders that were over here. So ultimately, when we did come up and take out all of these highs, we essentially have now taken out all of the sellers that were here. All right. I was pretty confident that once we did this, and let me break it down for you, right? So overnight we did trade up. All right, this is all that happened throughout London, all into here. Okay, let me backtrack this to New York Open, and I'm going to kind of give you what I was looking at. All right. All right, so again, if you were on bounce back, this is where we caught it. I actually was looking to take the S&P. The S&P looked cleaner to me, but on a 1 minute time frame, right? Here's our 1 minute. This is price at 9:31. All right, this was New York Open right here. So essentially, what happened right at 9:30 is we got this spike. All right, this spike that was 66 points. All right. And you can see what all we did, the only thing that we really did was create these equal highs. All right, we created these equal highs. We failed to go up higher. All right, so once we got on the 1 minute time frame, once we got price to then come up and jam out everybody that was selling. This is your FU candle, your institutional candle. All right. So once we got that, everybody that was in a sell from the 9:30 open is essentially out of the sell. All right. And if you think about it, all right, if you think about it, everyone that saw this happen, right, these equal highs, okay, got into this trade. Got into this trade right here. All right. And then whatever your stop loss was, once price moved down, you were probably at break even. This took every seller out of the market. All right. Took every seller out of the market. As price started to come lower and create a new low, all right, we broke structure, and now this was the confirmation that we were looking for that sell, right? All right, so here's the play, right? We started going lower, right? Started going lower. This is the play I was looking for, okay? I wanted price to mitigate, all right, this last up candle. So I throw on that 50% fib, all right? And this is all I'm looking for, all right? We'll do it on the S&P as well. But I'm taking an entry, me personally, because this was a higher risk trade setup, all right? I took 1% off the 50 and 1% off the 80, all right? The 80 didn't get activated. And then, of course, my stop, all right? My stop is just above the opening of that candle, all right? So the idea is, and if you kind of follow along with this, all right, the idea is that the market forces price up one last time, all right, before entering into a sell position to take it lower. Well, now it needs to mitigate out of that buy position. So it needs to mitigate at least 50%. That's the theory, is that 50% is where they break it even, or sometimes they'll take it a little higher to get into some sort of profit and then take it further down, all right? So that was the setup, all right? Now, what was I looking for as far as targets, right? Well, target one for me was these areas of equal lows, all right? And then target 2 for me, these areas also coincide with an imbalanced area, right? Right in here, okay, inefficiency. And then ultimately, I wanted to take these equal lows out, all right? That's honestly what I would have been happy with. I would have been done with, all is good, you know, but that's what I was looking at, all right? On a 1% risk, all right, you're looking at a 16-to-1 ROI, making 16% off of that, all right? 16% on a 1% risk, all right? So to put it in perspective, all right, say you had a, I don't know, $1,500 account, we'll just say, all right? So on a 1,500, I'll go a little higher because that stop loss can help it. All right, say we'll do 2,500. So on a $2,500 account, you were only risking $20, but you were going to make $832 out of it. All right. I'm sorry, not 800, $332. All right. So it was a phenomenal trade setup on the US 30. So you can see how we played out. Price starts to come and mitigate back up for us here. Let me move this out of the way. And there you go. All right. So that candle right there activated the order for us. All right. Oh, my bad. Sorry. I'm just reviewing, going over this morning's setup that we had, and then I'm going to jump into some charts. All right. So just so you guys can see exactly what I was looking at, what Bounce Back was looking at, but it's this candle right here. All right. This is the institutional candle, the last up candle. All right. Before the down move is ultimately what we're looking at. All right. And again, the market, whatever market maker, right, whatever big bank, whatever big money caused this drop, all right, need to mitigate out of this. Okay. So whoever, and just think of it like this, right? When you start to look, no, Bonnie, I didn't send this out. This honestly happened way too quick. I sent it out on S&P. I sent it out on S&P right as it was happening, but it was way too. Think about it, these are all just 1 minute candles. So I mean, from market open at 9:32, at 9:55 is when I finally saw the confirmation that I needed. All right. So you can kind of see we just danced around here for a little bit until we finally got into profit. Okay. Once this happened, and again, I look for about 50 points. We were about 88 points there. I was at break even, and here was my target, right? My targets were initially going to be right back down to these areas right here. Boom. All right. So target 1's hit, and then we play out and finally hit my final target. All right. Yes, it went a whole lot further down, but I was honestly happy with just taking my 16%. All right, off this one trade. So from the time, right, from the time that price entered, okay, right here at 9:55, 9:55 a.m. for me, to the time that price hit my final take profit here at 10:14, I honestly was done for the day. All right, 16%. Nothing really more to say about that. All right. Now I did trade off my 15-minute as well. All right. There was some opportunities to get into it. And it was right on this candle, I believe. Bear with me here. Nope, it's on this candle, right? Let's see. Oh, here we go. I didn't even show you. I didn't take these trades, but US 30 was the same thing. I took it off NASDAQ. So here, I'll show you exactly what I was looking at here. Okay. So on the 15-minute, right? On the 15-minute, what do we have here, right? We have the last up candle before the down move. Okay. Price needed to mitigate out of this last 15-minute candle. Remember, price is fractal, right? So it needs to do it on all time frames. So this was the setup. I took it on S&P. It was just an easier setup for me on S&P. Again, stop loss right at the open and close of these candle bodies. So again, you're risking on this one here, you just made 16%, all right? On this one here, you're risking 70 points, right? 70 points. And what were my targets, right? Well, ultimately, my very first target, right, is going to be right back down to the low. But you can see on the 15-minute time frame this huge area of inefficiency, right? That that we have. That would have been one of my first or secondary targets, and then another one right here. Okay, that's what I'd be looking at. All right. So if you just take it right back down to where it was at, that is roughly a 7-to-1 on top of the 16% you just made. Or you can take it here to almost a 10-to-1. All right. That's ultimately what I was looking at. You could see we came back and mitigated that. This was, again, that false move. Everyone was thinking, oh, you know what? They're going to rally. They're going to rally. All it was just mitigating this one candle, right? This one candle right here is that sponsor candle. Okay. Again, 50%. We take it off of that. And then you can see how we played out from there. It was just an all-out run. All right. So if you wanted to just take it to there, to take your 16-to-1 and then take your 7-to-1 and be done for the day, that was it. That candle did it at 2:30 p.m. All right. If you wanted to continue, and I kind of let my S&P one just ride out. And there you go. That was my second take profit. All right. So you could have grabbed on a 1% risk, right? On a 1% risk, you could have grabbed 16% and another almost 12% here. You're done for the day. Nothing else to do, right? Close your computer. You just made a pretty decent amount of money. All right. No matter how big your account size is, that right there was a fantastic trade setup. All right. Where I did take the trade off of my 15-minute time frame was this one right here. I didn't take it up here because I was in the S&P on that one, but I did take it off of this one right here. And that was my target. Okay. I did take it off the 50, again, at the base of the candle. All right. So I was only risking 53 points, and I was ultimately taking it right down to here. All right. So this was a, 12.5-to-1. You could see it. Where'd I have it? Yeah, right here. This was the trade. This one candle right here on US 30 is the one I did take it off of right here. All right. So I took it here and I wrote it down to this imbalance right here. I closed out. I was like 245. I was on the phone. Actually, I was texting with Andrew. I don't know if he's on, but yeah, I was poolside when I was done. I was like, all right, that's a good enough day for me. So here's exactly how I was looking at the market. This is the trade setup. And then we'll take a look at, yeah. I was scrubbing the pool, man. I got I had a Charlie horse in my shoulder from scrubbing the pool so much. So that's how I took US 30. Now S&P was the same exact thing. All right. S&P again came in here. We'll talk about it. Again, on the 1-minute time frame. All right, here we go. Let's backtrack it. Bam. So yeah, Dave, when I intraday trade, I'm only trading up to 15. I'm looking at those 15-minute scalps off of that 50% or 80%. But I get down to the 1 minute to look at the price action. All right. So in this case here, right, this was 9:29, a minute before market opened. All right. Now this was the key area that I was looking at, right? I wanted to see what we were going to do if we were going to make a new high. All right. That's ultimately what I was looking at. Okay. So you can see we didn't, right? We did not make a new high. All right. So that gave me my confirmation. And from there, right, this was that huge FU candle, right? That was that huge FU candle. So my next play, right, my next play is setting it up. Here we go. All right. And everyone that's got a smaller account, trade the S&P. All right. You know, especially in our group, we have a lot of people that are having a hard time with US 30 just because their account can't handle it. All right. Trade the S&P. It's a whole lot easier. All right. And I'm going to kind of show you exactly. You look for a specific candle with imbalance, or any candle with an imbalance will work. So when you're dealing with imbalances, the higher time frame takes precedent. But I do go down, you know, if I need to look for risk, right? If I'm taking an entry and I need to find out, all right, where's my stop loss have to go? I'm going to go down as far as I can go, 1 minute. But the higher time frame takes precedent over everything else. So on the 15-minute scalp technique, yeah, you know, it's just like whatever looks good, and I'll kind of give you an idea, right? I'll show you exactly what I was looking at here today. And let's see, no wicks on the body. What do you mean no wicks, Matt? So that's just your preference. Me personally, if I'm doing my scalp, no, I'm doing it off the body. But when I'm drawing my actual fibs, I go wick to wick. Okay. So just to kind of play it out here, what I was looking at was this, right? Again, here's your institutional candle, right? Let's move this down. All right. So institutional candle right here, right? This is the last up candle before the drop. All right, that's what I'm looking for. So when I'm trying to find institutional candles, let me give you an example, right? So on the 5 minute, all right, the 5 minute, I could have used this one here, all right, but I want the institutional candle to be as close to having no wick body, right? I just want the body. I don't care about the candle afterwards, but I want the body as close as I can. So if you can see this one, there's very little wicks, right? Where this one here has a higher wick. So that's why I use the 1 minute. So now what I'm looking for is, obviously I'm looking for a target entry. What is my risk? My risk is the candle bodies, right? The opening and close of the candle body. And then what are my targets? Okay. Well, like I said previously, my first targets are going to be this area right here, all right, of equal lows. And then from there, I'm going to look for those imbalances if there are any, okay? But these areas right here are another area that I'm looking at, okay? So I've got my two targets. I know what my risk is, and I know where my entry is, all right? Right, if I entered off the 5 minute, it would be a bigger risk, correct. But I'm looking for, that's why I look for the candle that has the smallest wick as the last up candle. Okay, so that's what I'm looking at, and let me show you how it'll play out, right? So again, S&P, if you have a smaller account, this is the one I suggest, all right? I do 1% risk off the 50, 1% off the 80. It did not go to the 80, so I'm not gonna even bother putting what it's up there. But to give you an idea, right? So let's say you had a $1,500 account, all right? And you're risking 1%, all right? 1%. To take this, to take profit 1, which was my target, all right? This is relatively a nice trade setup. This is a 13, we'll just call it a 13 to 1, right? On a $1,500 account, you're risking $15. You're gonna make $162 off of this trade, right? On the S&P. And it's telling you to use a 0.08 or an 8 lot, depending on your broker, however they measure it. But on CoinEx, you use an 8 standard lot on this. If you're using like FX Choice or something else, you're using a 0.08, all right? If you've seen a body close above the high instead of it wicking up, would you think it was, yeah, absolutely, Gary, yeah. So if we did get a closure above these equal highs, yeah, this was just a failure swing. That's what it was. Price action wise, we failed to close above it, all right? Yeah, Matt, so this would be on CoinEx, this is an 8 standard lot. So this is be an 8.0 is what you're trading S&P, all right, for risking $15, all right? So anyway, you can see, we'll see how it plays out. Price does come down. and it's just a waiting game, right? All right, we're getting closer. Hold on. We'll just delete this. We don't need that. There we go. All right, so we got into the trade. Bam, my order got activated. All right, it was just a waiting game. Remember, these are just 1 minute candles. Got activated at 9:55, just like US 30. And then what I'm looking for is I'm looking for that. I'm looking for price to just move instantly away. US 30 took about 3-4 more minutes, but I'm looking for that. All right, I'm looking for that nice movement away. All right, and then we take off, right? So that's ultimately what I was looking at. We'll play it out here. And then ultimately it gave us another entry. Bear with me, we'll just get out of this. All right. So just to give you an idea, right? To give you an idea what we were looking at. So this ended up taking me to take profit 1, right? And then it gave a second entry, okay? Gave a second entry up here. I actually took this trade instead of US 30. I can delete that. I don't need my stop loss to move. And let's just look at this way, right? So, sure, on it's just replay mode. So you see the little, it says bar replay right here where these little arrows are. Just click that and you can move wherever you want to go. This is how you backtest, right? This is how you backtest. So if you wanted to come, say like right here, okay? So just like US 30, right? You can see this is the candle that I wanted to play off of S&P, right? Right, that's the candle I want to play off of on the 15. We'll do a short. So off the 50%, right? Off the 50% on S&P, the risk was only 5 points, right? Risk was 5 points. And again, what are my targets, right? Targets are these areas of imbalance, right? Down here. This one right here. And then ultimately, I wanted that low to get taken, all right? That's what I was looking at, all right? So this is how it plays out on the 15. You can see, bam, right into the order. I personally didn't have my 80%, but you can see this went right into the 80%, okay? I only did 1% risk because I already had, you know, I already had my daily profits, so I wasn't gonna risk more. So I was only gonna do a 1% risk, all right? And then ultimately you can see that target 1 was taken, okay? Target 2 was taken, and target oh, my bad. So this was my ultimate target right here. I was done for the day. It was like right around 245. Yeah. Let's see. Right there. That's where I was done. Okay. So this was another 15-to-1 ROI just by catching that. Okay. Yeah, Dave, my bad. I don't remember if you need the paid account or not. Okay. But yeah, so that's how I played it out. Again, on the 15-minute time frame, how I got into some of these, what I'm personally looking for, right? What I'm personally looking for are these impulse candles, right? So like this candle doesn't qualify, none of these qualify, but this one does, right? This candle here qualified. So I just played off of that, okay? You can see right off the 50%. If you want to split it, because the 80% gives you a better ROI. Right to the candle open. So you're risking 4 points on the S&P. And then I ultimately, again, took it right to here. So this was another 11-to-1, all right? You could have played it off the same thing. So this candle here, right? This candle here isn't a huge impulse candle, but the next one is. So come right here. You can see that one would have almost touched your 80% if you had one there, but take it off the 50, take it down. Why did I take which one, Matt? Why don't you qualify it? This candle right here, because it's not a huge impulse. There's a lot of indecision, a lot of wicks to the upside. You can see this one here, not a lot of wick, not a lot of wick. This one here is an indecision candle, okay? Same thing, like I'm not counting this, right? I will count this one here, all right? Because this one, as long as for me, what I've back tested, as long as the body of the candle impulse down is bigger than the wick, you're fine, okay? So even on this one here, right, if you would have taken off the 50, okay, even off the 80, okay, that one was a perfect one off the 80, but let's just say off the 50, okay? Off the 50, there's your risk, okay? And this candle takes you at entry, all right? It comes back down to, let's just say here, okay? At the very most, made you 28 points. You were up to a 3-to-1 before it came back, okay? So at the very minimum, you should have at least been in some sort of profit. Let's see. Does that answer your question, Julio? And then remember, price is fractal. So when you're looking at it, right? So like when we were on US 30 here, okay? Let me go here. So on US 30, right? The other thing I was looking at, I took another entry, but it wasn't a great ROI because as you get into higher time frame, okay, as you get the higher time frame, it starts to create a bigger risk for you. You know, you need a bigger stop loss. So ultimately, just say here on the 1 hour, okay, on the 1 hour, you could have taken it. There we go. So you can see here's your 1 hour impulse candle. Price comes up. Here's your 50. Here's your 80. When I normally do it off the 1 hour, I only like to take it off the 80 because the 50 is just not worth it. Okay. So again, risk is at the candle open. Okay. So you're risking 89 points. All right. And if you just want to take it to these equal lows here, right? Or if you want to just mitigate the imbalance, okay? You've got two areas of imbalance on the H1, right? You got this one here, and you've got this one here, all right? Depending on time, you know, but even at the first imbalance, you're still at a 7-to-1 ROI off of this, okay? If you go to the second one, you know, it's at a 9-to-1. So as long as I can crunch my stop loss, that's what I'm looking for. So, you know, you saw on US 30 and S&P this morning, I was able to take it off the 1 minute. I took it off the 15, and you could have also taken one right around midday, right? Midday off the 1 hour. Okay, does that kind of make sense to everybody? Anybody have any questions on that?
Mike, I have a question for you.
Yeah, go ahead, man.
Hey, so I don't know if you know Mike, but how do you determine if it's going towards a down or towards is it because the impulse move? Is that how you determine the bias?
No, just structure, based off structure. So like here, let's look at it, right? So on US 30, right? So let's just do it this way here. Hold on. Okay. Once we failed, what was the best view? 15? Let's look at a 5. Okay. So when we were here at the open, right? So this is like 9:25. Here's the 9:30 candle, right? Once we failed to make a new high, right? We failed to close and make a new high. Even if you go to the 1 minute, right? There's no candle closure above it. Okay, no candle closure. So structure-wise, this is a failure swing, right? Price failed to make a new high. So from there, once price made a new low and we had a candle closure below that, right? This tells me that we're going down, right? This tells me that we're going down. And then from there, it's just understanding what the market was going to do. You know, so the biggest thing, honestly, the biggest thing for me that I had to learn was, well, why the heck did price do that, right? Why did price come here and mitigate to 50%? Why is that 50% off of this candle so important, right? Why is it so important? And it's knowing that at this point, right at 9:30, the market, right? So say, call it whoever you want, you know, JP Morgan, Citigroup, you know, whatever, World Bank, somebody came in here with 1 million lots to buy it up, to turn around right here and sell it down, and had to leave this position open, right? They had to leave that open. They can't close it here, because if they do, right, that's gonna be it's gonna screw the order books up as far as the trading desk goes, right? So they have to keep that open, because if they close that buyout, then too many sellers, the sellers would have if you put it, like, think about a scale, right? You have buyers here, sellers here, and as order flow goes up, it may cause the sellers to go down, you know? So if that position got closed out too soon, the market would just drop. So they need to keep that market open, that buy open. And that's what this move was right here. This was a hedge, right? This was them closing that buy position right here and then allowing price to go back down. All right. That's what that move right here was. And then ultimately what we got later in the day was the exact same thing, right? Was it on the 15th? Let me just see. So on the, yes. So on the 15-minute, same thing. This candle right here, right? This candle right here needed to be mitigated, right? It needed to be closed out. So again, it's no circumstance or no coincidence why price comes right to this 50% and then drops, because that's what they needed to do. So hopefully that kind of, and that's honestly what I'm looking for. If you guys follow any of the Trade House guys, if you follow Lex Waves, John Dollery, I mean, certain traders definitely get into more in detail. You know, if you follow Zach, go to, Zach McDonald. He's part of the Trade House group. He comes on at like 5 p.m. Eastern, Tuesday, Wednesday, Thursday. He does a great explanation in every trade setup he looks at. He talks about, all right, this is the last up candle, last down candle, that's ultimately, how I trade. I look for, why does the market need to go there? All right. It's always between the two opposite candles. So for me, Bonnie, the easiest way to do it is look for the big move, right? So I look for the, like this candle right here was just a huge drop. So what was the last up candle before the huge drop? It was this one here on the 15-minute time frame. When we get to the 1 minute, right? That's why I had to go to the 1 minute on this one here, because on the 1 minute, it was this candle right here. Okay. That's ultimately what I'm looking for. All right. It can happen on every time frame. A great example, right? A great example. And I don't want to jump around. Well, I'm kind of done with the indices. I'm going to go over what I'm thinking as far as a trade setup in a little bit. But let me give you this, right? So on the DXY, I actually use the daily candle, right? So why, again, it's no wonder why price on the dollar index, okay, turned around right here, because that is, let me fix it up a little bit here, because that is 50% of this last down candle. So, I know we don't sell the dollar index, but institutions do, okay? So you can see price comes up and then comes down. There was a huge push down, okay? This was the last down candle before price just took off. So whoever forced this down candle needs to hedge out of that position. So that's why price came all the way down to the 50% here, okay? And then was able to come up, all right? Yes, exactly. Great. What I buy or sell is look for a strong impulse, move in the opposite direction if price does not react. Correct. Yes, absolutely, Victor. You're right. Exactly what Victor said. So if price doesn't move, and you'll hear every educator talk about it, right? Price needs to move quickly away. All right, quickly away from there. All right. A good example is if price, let's just say this, right? Hypothetically, say this was the last down candle and price comes into here and you can just see it just bouncing and bouncing and bouncing. That to me is not validating the institutional candle, right? Or if you follow Lex Waves, he talks about it, he says it's a punch candle, right? That's not validating that. So in that position, I honestly, if I'm in profit, I just move it to break even. If it takes off, it takes off. But I don't wait for price to go 20, 25 pips. If I start to see that, especially on the smaller time frames, I just manage my risk, and I'd rather break even. I'd rather break even than take a loss. Okay. Did that sell candle stop out buyers? Which sell candle, Matt? You talking about on the dollar index? All right, we'll get into it. Yeah, I don't. Yeah, if you're talking about the dollar index, yeah, I mean that's kind of what it's intending to do. It's stopping out buyers. It's getting people who are selling, to think that it's the turnaround, right? It's the reversal. It's anyone who's like a breakout trader or something like that. It's giving them that hope that it's price is breaking out. So that's what it's designed to do, right? Just think of it this way, okay? And I keep reminding myself this, all right? Any educator you follow, anytime you Google Forex, right? 90% of Forex retail traders lose, right? So why do they lose? Because of all of these techniques, right? These techniques work a high, enough times to give that false hope, but the banks they know what they're looking for, right? That's what they're doing. They're giving this institutional move to give that false hope, and then they just turn around and buy it right back up. Okay. So let's get into it. Let me go and look at what I'm actually looking at, right? So one of the things I'm personally looking at, all right, you can see we did turn around here, but on this move right here, we are sitting at a key fib area, and I'm actually looking to be a little bit bearish on the dollar index. You can see we came just below the 61 and we're starting to turn down, all right? I'm going to be actually bearish for the rest of the week on the dollar index because of the unemployment numbers, all right? So when we were here earlier in the week, last week going in, remember we were stuck in this way. I was looking to see, are we going to break up or down? This was the pivotal moment, right? We did reject that 50%. So we did go into a bull market, right? The dollar index is still in a bull market, all right? Without a doubt, what are my targets, right? I still want these highs to get taken, and I'm looking at this key imbalance area on the weekly, as well as these equal highs to get taken, all right? That's what I'm personally looking at on the dollar index, all right? But I do believe, right, and last night, I was setting some charts up and I was looking, we were trapped in here, building orders on both sides, right? Building order on both sides. So obviously the liquidity has been taken here, right? We still have that liquidity up here. We still have this nice H4 imbalance right here, okay? So that's gonna be my next target for the dollar index. But I do think we're gonna come down. All right, I do think we are going to come down. I'm going to be bearish. And the reason I'm bearish is because of that unemployment information, right? One of the things I like to do is I like to have my plan set up, right? My trading plan set up as far as what I'm going to be trading, okay? If you look at last week on Thursday at 8:30 a.m., we had a really bad, this was almost double, okay? This was almost double. So if we come here and look at, that was, what was that? That was April 2nd, okay. So if you come here and look at April 2nd at 8:30 a.m., right? You can see that the dollar really didn't, I'm sorry, the dollar index gave this push up before it came back down, right? Pushed up before it came back down. I am looking for something similar, but I think we are going to come down and mitigate some of this imbalance down here, okay? And this is what I'm looking at. I think we are going to come down in here and mitigate this for the into the rest of the week, and then from there we're going to take it up. All right, that's what I'm personally looking at to happen. All right, this down here to mitigate that before we come up, take out this liquidity and mitigate this H4. Okay. With that in mind, because you can see we've been selling off most of the day today, we still have this liquidity up here. I want to see how we react in this H1. Let me label this. Bam. No, I don't trade the DXY. Actually, most people can't. Most brokers don't allow it because the margin on it is ridiculous. But now the reason, especially for newer people, the reason I focus in so heavily on the DXY is it's the cornerstone for what the US dollar does. Does the DXY goes? No. DXY and indices have no correlation. All right, no correlation. The Japanese yen is actually closest to correlating against the indices. But, and we'll kind of get into that. So US dollar index, right? If we know what the dollar index is doing, the first thing that it correlates the best with is Euro USD, okay? Because the Euro is weighted almost 60% on the dollar index, okay? So what does that mean? That means that if this, and let me do it like this, right? So on a 1 hour time frame, right? If this is the dollar index, okay? Let's just say that, okay? If that is the dollar index in this 1 hour time frame, I'm going to copy it, move it over to Euro, okay? In the same time period, it should be the exact opposite. You see how it's the exact opposite? I mean, almost to the T. Okay, so if we can see what the dollar index is doing, it gives me now two charts instead of one. I get two charts on Euro USD and dollar index. Okay. Also, if the dollar index, if the dollar is bullish, I'm expecting to take US dollar Japanese yen and US dollar Swiss franc up. All right. If it's bearish, I'm going to be taking those two down. And obviously, if the DXY is bullish, I'm going to be taking gold down, and vice versa. Okay. So it gives a really good correlating factor, and it allows you to see some more charts. Okay. So the first thing I'm looking at now, especially on the dollar index, is Euro. Okay. Again, I'm not looking. I need us to first get out of this imbalance. Okay. That's the first thing I'm waiting on. All right. Because if we do, you know, ultimately, I want to say this is 50%. Let's just see. Yeah, okay. So this candle has been mitigated, right? Because you can see we did come into 50% of it. So I'm going to be looking for two things, right? The first thing I'm looking for is if we do come back down here, if we break below here, okay? So ultimately, I'm looking for, oh, my mouse, come on. So I'm looking to see if we can break into, oh, come on. There we go. I'm looking to see if we can break this 1 hour imbalance and then come and take these areas here. If we can break that into this area here, I'm definitely going to be, oh, the yapping dog. Hold on. Okay, sorry, yapping dog. So I'm paying attention in here, okay? Now, if we start to just pull up and leave this area away, okay, I'm definitely gonna be changing the bias on what I'm looking on Euro, okay? But I'm going with the bias that we are going to come down into here. So I am looking for dollar index into the rest of the week to sell off, okay, before we come back up. And if that's the case, Euro USD, right, Euro USD, I'm going to be looking to take it higher. Okay, I'm going to be looking to take it higher. This was a play I was looking at on the 1 hour time frame. You can see this is the last up candle, right? Price came into 50% of it and rejected it. All right, rejected it very nicely. That's what I'm looking for. So it pulled away from it 40 pips immediately. If we do come into this area down here, you can see this 1 hour imbalance. Okay. I am going to be looking for price to come into there. All right, I'm going to be looking for price to come into this area right here. All right, and seeing if we are going to reject it. Okay, now coming down to a 5 minute. Okay, you can see this is the 1 hour. All right, you can see on the 1 hour, this is the 1 hour imbalance. All right, the 5 minute is in there. Okay, risk wise, price should not go any lower. Let's go to a 1 minute and see here. Okay, so on the 1 minute, price has no reason, and just follow me here, right? So this all has been mitigated. Price comes up, you can see it comes back down into this candle here, right? This has all been mitigated. All of this has been mitigated, okay? So the last area of mitigation that's needed is right in here, okay? Right in there. And that's on the 1 hour. I'm sorry, that's on the 1 minute, okay? So coming in at around 1.08355, I'll give it, that's 3.4. I'll give it 3.2. You can probably even go to 3.3, but we'll say 3.25. So my stop loss has to go right there, okay? Everything else here has been mitigated, okay? You can look back. Everything here has been mitigated on the 1 minute. Everything has been mitigated on the 5 minute, right? So you can see all of this area here has been mitigated, all right? And then going forward on the 15, same thing, all right? So I'm looking to take 2 entries, right? I'm gonna have 1% risk here, stop loss of 5 pips, right? And then I'm also gonna go what 50% is. Just in case price doesn't come all the way down there, all right? So these are the 2 orders I'm looking at, okay? This one here, 15 pip, this one here, a 5 pip stop loss, okay? Now, what I'm looking at is taking it for my first target right back up to the highs, okay? This would be that would be almost a 17-to-1, and then this one here would be a 5.5, okay? So even if this one doesn't get activated on a 1% risk, you're at 5.5%, just taking it up to the highs, okay?
Quick question for you.
Yep.
On that imbalance, did you take the 50% of the imbalance or off the candle?
So what I personally do is I go off the candle, right?
Okay.
There is no rhyme or reason why, well, I'll just put it this way, okay? I just got tired of missing out on trades, right? So what I do is I make sure I get the trade, and then I make sure if the trade does come all the way down to where I think it needs to come to, I can have it just a ridiculous ROI on it, okay? But for me, what I do is, yeah, I go from candle body to candle body. And then that's how I measure my 50% of that, okay? Because this candle still needs to be mitigated. And for it to be mitigated, it still needs to be 50% of the candle, all right? Doesn't mean that price is gonna stop there, but at least I'll be able to get in the trade. And if price turns around somewhere down here and doesn't activate this one, at least I'm still in that trade.
Okay. Thank
All
you.
right.
I can ask,
What's up?
can I ask you one more on this topic?
Say it again, bro. You were breaking up, man.
Oh, can you hear me?
Yeah, go ahead, man.
What 50% doesn't like the imbalance?
Yeah, no, you're breaking up again, bro. Are you on your AirPod? That was my problem.
Hold on. I'm gonna find them. Okay, hold on. I'll be back.
All right, no worries. We'll get back to you, Vic. All right, so so that's where I'm looking to take it off the first get-go, but now I do have some targets going into it, right? So immediately you can see that we have some inefficiencies up here, as well as some nice equal highs right here, okay? All right, we do have some equal highs right here. If you look at the 1 hour, and this is where I kind of like to go, the 1 hour, that's going to be one of my targets. Right in here is going to be a target, and then obviously right in here is going to be a target. And then honestly, I'm not going to get greedy. I mean, if this move happens like this, I'm done. I'm done with it. You know, I don't need to take it any further than this, right? I don't need to take it any further than that. I mean, this right here, 170 pips would be 34%, and this one here would be 11%, you know? So I'm looking at almost 50% of my account on this one trade that realistically can take a day and a half, maybe even less. You know, I mean, you figure from here to here only took 18 hours. Okay, and that would be the same, pretty much the same move I'd be looking at. Okay, what if 50% of the candle doesn't land in the imbalance? Well, it's still needs to be. I'm trying to think of when it wouldn't be. I mean, a perfect example. So Vic, just like this, right? Like this candle here is what I'm looking at, right? Now this is off the 1 hour as well. Right? But you can see the 1 hour, the imbalance is a little higher, right? The imbalance is actually here, right? On the 1 hour. I'll just do it like that, okay? So the imbalance comes a little lower on the 15-minute, all right? But if I still measure this out, right? That's 50% coming in here. I'm taking it off the 15-minute, right? I mean, that's a pip difference, 84, let's see, 0.843, and then that's 0.4. So it's 2.5 pips difference, you know? I mean, you know, Dart, you know, especially with how I post on the chat, my frustration missing it out by a point. That's why this one's here. I'd rather take the smaller time frame, or I'm sorry, the smaller time frame to just make sure I get into the trade. All right. Let's see. Hold on. Let me catch up with the chat here. Could you share the ideas on the I Am Trader chat? The I Am Trader chat. Here, what I'll do is I'm just going to post them in here, and you can just copy them. All right. So this is what I am personally looking at on Euro USD. I'll throw it in here. Give me a sec here. Let's see. Manny's piecing out. By the 2 orders, are you placing them at the same time as limits? Yeah, so Travis, me personally, yes. The way I trade, I twin trade it, right? So I do 1% risk on this order and 1% risk on this order, okay? That way, if it doesn't come all the way down, at least I've got 1% going into this trade, and I don't completely miss out on the trade setup. And I probably will set a limit order once I get the confirmation on the DXY, and let them run at the same time. Yeah, yeah, I'm twin trading it. Yeah, so I'll have these 2 orders going. Absolutely. All right, yeah, awesome. All right, so this is what I am looking at. Let me just label this a little better. And we might get this move. I personally, I'll tell you right now, if this gets into here within the next 2 to 3 hours, I'm actually going to watch it I'm not going to just set a limit order on it and take off from there, because I want to get the confirmation from the DXY. All right, because the other thing that we could do is if this DXY, right, if this DXY starts to pull away, right, I would say that this is my, here's my thinking, right? So if the DXY gets past this, right, if we break above here and get into this imbalance and we go up, right, so if we break this right here, that Euro USD trade is invalidated, okay? And the reasoning behind that is that would be a significant move away from 50%, okay? To tell me that we are not coming back down, right? At least not in the next 12 to 24 hours. So if that's the case, right, if that's the case, then this trade would be invalidated, all right? And the actual setup would have been the sell from 50% of that candle, right? The sell because just looking at it, well, where's the money, right? Where do we have all the money? And the money's sitting right here where you have all the liquidity, right? Everyone's saying, oh, we found support, and they're going to take this up, okay? Yes, Gary, I take spread into consideration, absolutely. From your buy entry and also your stop loss, so it doesn't get, yes, so if like Euro USD on my broker is 1 pip, sometimes it's not even 1 pip, it's like 8 pipettes. So yeah, I find on my broker, I find these candles, I mark it up exactly on that and just find out what the offset is. And then, yeah, so if I have a 1 pip difference, so 1.08468, so I'll have the order set at 478. And then, instead of 37, I'll have it set at 38. And then, of course, yeah, stop loss would be, like a 310, 1.08310. So yeah, absolutely, you have to, because it's the spread may take you out, and you see how close of a tight stop loss I have. That 1 pip could be the difference between me getting 35% or me losing 1%. All right. So here, I'm going to send this out. I'll let you guys take a look at it. And like I said, just keep an eye on the DXY, right? Keep an eye on the DXY because that's going to be the deciding factor, right? I'm going to throw it in the chat. There you go. You guys could just open it up and copy it, all right? Oh, you know what, Julio, what did you have here? NASDAQ? All right, yeah, we'll take a look at NAS too. Close that out. All right. So that's Euro USD. That's what I'm looking at, all right? Yeah, sure. So here's DXY for me. All right. So, and just remember, so we are bullish on the DXY. 100% we are bullish, right? We are bearish on Euro USD, all right? The higher time frame, we are bearish. If you look at the daily time frame, right? Daily time frame, what have we done, right? We have, here's our high. We made a lower low. We have a lower high. We have not made a lower low, but as long as we don't break above here, we're still going to be in a bearish area. We're still in a bear, and these are the equal lows that I'm targeting way down here. But this trend is still bearish, right? Take a look at this. We are still in a bearish trend, okay? From the higher time frame, we haven't, until this here breaks above this here, that is when we'll turn into a bullish trend, all right? But this is bearish 100%. This is just taking a counter trend move to get us up to this area here where we have some inefficiencies, right? On the 4 hour, we have a large 4 hour inefficiency that I just don't see them leaving open for us to go down and take some new lows, all right? So that's what I'm looking at. I will set an alert. All right, I'm going to set an alert just to see how we get down there. All right. All right, so let's look at some other stuff that I'm potentially looking at. So on US dollar, Japanese yen, right? what I am personally looking on UJ, right? UJ, we are, if you just look at the higher time frame, right? We are bullish, right? I can get rid of this shenanigans, all right? We are bullish on it. I am overall eyeing these equal highs up here, okay? I am looking at those to get targeted. What I am personally looking at for an entry, we'll go to the 1 hour, right? Delete that. That's doing exactly what I thought it would do. What I am personally looking at, I'm looking at this area and then I'm looking at this area here, okay? These are the two areas I'm looking at. I'm potentially still interested in taking an aggressive move from here. It's going to be one of those things where if I take the L here and lose 1%, I'm going to set up for a 2% risk down here and catch the bigger move. All right, just like we did on GJ like 2 weeks ago. So what I'm looking at is this 1 hour imbalance right here off this candle, right? This 1 hour imbalance. My stop loss is off the 5 minute right down here. That's my risk. And then we do have a 5 minute imbalance right in this area right here, okay? Is a 5 minute imbalance. So it doesn't really change anything. I'm not going to twin trade it. So I'm only going to be doing 1% risk. So I'm going to be taking an entry off of like 1.08.06. Stop loss is just about 16 pips. Don't forget the spread, all right? And then my first targets are just coming right back up to these equal highs, okay? That's going to be my first targets. And then from there, I'm going to be looking at like these inefficiencies up here, all right? And then there's some bigger ones on the 4 hour, like right up here on the 4 hour. But these targets up here are most likely going to happen into next week. For the intraday move, I'm just looking to, I'm not going to sell it down. Right? I'm not going to sell it down. If I'm thinking, if I'm expecting the US or for the dollar index to go bearish down into this area, right? Down into this area and then potentially into here, right? I'm also looking for US dollar, Japanese yen to do the same, right? To come down in, and I'm going to be setting up to take this move here. If I get stopped out of this one, I will be taking this move right here, okay? I'll be looking to something like that with a stop, which I'll find somewhere there. But even if I take it like that, that's going to be a pretty decent move, right? Just taking up to these highs here, I'm looking at something like that. All right, so these are the two plays that I'm going to be looking for. Let me just see if I can find my risk on this bad boy down here. So you can see on the 5 minute, this has all been played out. This has all been played out. That's been mitigated. So the risk on the 5 minute is right here. Let's see. Right there, that's the 5 minute. Let's look at the 1 minute. Come on. There we go. So on the 1 minute, we're going to have to go a little lower. So on the 1 minute, I would say below these lows right here is where I would go. So we can tighten it up just a little. So right there, okay? So these are the two plays I'm looking at. I can delete that, we don't need, oh. Come on. Okay. So these are the two plays I'm looking at, all right? And again, I'm not interested in selling it down, only to buy it up, all right? Anybody got questions on UJ? And just remember, so the Japanese yen side of it, right? The Japanese yen side, which is the safe haven side, because of everything going on with this virus, the dollar index is the ultimate safe haven in the world. So that's why I'm seeing us continue to go bullish on it, right? Ultimately, regardless, wherever we're going, this area needs to be mitigated up here, and then these highs need to be taken. All right. So that's what I'm looking at for that. Let's see. US dollar, Swiss franc, right? I am personally not, I had this setup drawn up, but I honestly don't even want to take it. It doesn't look as clean. I think Steady was actually calling this out as well. It is worth the 1% risk. It would line up with that Japanese or US dollar Japanese yen pair that I was looking at. You know, and ultimately the targets would be just to come back up to these equal highs right here. Okay, because there's a ton of liquidity sitting right up here. So just coming right back up to that area right there is a 5-1. Okay. So if we can get a spike down into this area here off that dollar index, this would be the decent play. All right. Let me delete all this. This is from last week. Okay. So here's the play that potentially would work out if we can get a spike in here. Okay. Just be prepared. US dollar Swiss franc moves slow, very, very slow. I'm not touching UCAD, so I talked about it before. Oil is just everywhere. I'm not interested in trading this. This to me has no structure. This is, we're going to cut production. We're not going to cut production. We're going to have a meeting. We're not going to have a meeting. So I'm not interested in trading it. You know, I still see us coming down. I see it breaking down and us coming down on it. So because of that, I'm not going to trade any of the Canadian pairs. You know, I tried trading EuroCAD. I sent it out earlier today, right? And it look at, I mean, this was just shenanigans. I mean, up, down, up, down. This right here is garbage to me. You know, I want nothing to do with this. This has no structure, so I'm staying away from Canadian pairs. All right, so GU. So let's go over GU, right? I sent out GU on here, but I just don't remember what the heck the trade was. I didn't jump in it because I was already done trading. Let me go to the trade idea, Telegram. Is this it? No, that's AJ. I'm looking at AJ as well. We'll get to it though. Is this it? That's UJ. Yeah, that's the UJ I was talking about. All right, I can't find the thing, but this was the candle I was looking to play off of it. I'm not interested anymore on it just because we're going sideways, right? We ultimately are in a consolidated 37 pip move for the last 10 hours. So this to me, I'm staying away from it. There's a lot of pressure on the pound, and I'm thinking, again, my bias is that the dollar is going to weaken going into Friday. So I think that's why this is just going sideways. So I'm not really caring about that. I got nothing on GJ either. All right, EJ. So on EJ, right, if I am bearish on the DXY, I would have to be bullish on Euro, okay? Because that's how the correlation works. So remember the Euro, and I know I've shown this before. So there's a dollar index, right, a DXY. And then there is, come on, there we go. And then there is an EXY, right? A euro index, okay? So it ultimately moves the opposite of the dollar index, right? You can see this peak here, this peak here. We drop down, we go up. We shimmy shake up, we shimmy shake down. We spike up, or down, up, down, okay? So it's the exact opposite, right, of the dollar index. Another way you can look at it, right, if you want to put a line chart on it, put the EXY in, right? Here's your, on the 1 hour, here's your EXY, and then you can just compare it to the DXY. Just make it a different color. There you go. It's the exact opposite. I mean, to the T. To the T, it's the exact opposite. Oh, on GU? Yeah. I mean, I know they've done a lot of stimulus just like the US has on the pound. But yeah, so, you know, make sure you keep that in there. You know, your euro, especially if you like to trade the euro pairs. The EXY is pretty much the same, or it's the exact opposite of the dollar is doing. All right. All right. So with EJ, go back to the candles. So with EJ, right, the trade that I am looking for is coming up right now. So I am looking for a move to see if we mitigate into this candle, right? If we get a mitigation into that, I would be looking to take this higher, all right? Price has built a decent structure going into, you know, a bull structure going up. One of the things I'm looking at, let's just see what the 15 is. So there is some liquidity down here, right? But it should be supportive. All right, so on the 5 minute, this has all been mitigated. Mitigated. All right, let's look at the 1 minute. So this has been mitigated. So here's where the 1 minute lies, right here. 117,800 off the 1 minute. All right. So the setup I'm looking at is potentially something like this. All right. I'm hoping it consolidates a little. I don't want to just jump into this. All right. I want to get some confirmations before I do it. We're looking about an 11 pip stop loss. All right. Depending on what EJ's spread is. And then of course, just taking it back up to these highs here, okay, would put it at about a 9-1. Some of the targets that I would like to see taken, there are this would probably be my second target right here. Second target, and then my first target. All right. That's what I'm looking at. Again, I'm not going to jump into this until dollar index gives me the confirmation, right? So you can see the dollar index is pushing up. So just on the fundamental side, right, the correlation side. So if the dollar index is bullish, giving a bullish push, right, it's already, or it's diametrically opposed to the euro. So it would be weakening the euro, right? Weakening the euro. And if the euro is weakening, that's why you're seeing the drop. But if the dollar index is bullish, the Japanese yen, right, the safe haven side of the Japanese yen should also be gaining strength, okay? So that's why we're seeing this huge push down. I'll send this out. Again, I'm not going to set a limit order on it. I want to see that dollar index start to consolidate, right? I want to see something like this. I want to see some price action tell me that price is stalling out. I'm not just going to catch this knife dropping, okay? So this is the setup I'm looking at. Target 1, target 2, okay? That's the setup I'm looking at. Okay, there's that. I'm just going to set an alert. Okay. All right, I'm not trading EuroCAD. What I got on EuroAuD? All right, so this is a ways away. It's at like 100 pips. Let's see, 200. It's 250 pips away. All right, but all right, sorry. But keep this, I'll send this out so you guys can chart it. You can obviously see that EuroAuD is ultimately just taking a downward trend, right? Everyone could see the downward trend. What I'm personally looking at, this is the last up move, right? This is that institutional candle on the 4-hour that I am personally looking at, all right? That needs to be mitigated out. We haven't mitigated out of that candle yet, okay? So I am personally looking, one, we have this 4-hour imbalance here off of this down candle. I want to see price return back up there. I'm not interested in buying it up. I'll just wait for price to get up into this area, all right? Once price gets up into this area, I definitely would be interested in selling it down to mitigate way down here. And that would be a huge move. I mean, that's like a 837 pips. All right. And if I can get into that off of a 15, 20 pip stop loss, I mean, that'll be a huge payday. All right. What time am I checking the index again? I just sporadically, I mean, I just come back here and take a look at it. You know, it's, I mean, you can see on the 4-hour, we're giving a nice, the last 4 hours have been a big push, or this, what do we got left? The last 2 hours have made a big push on this. So, you know, just sporadically, if it doesn't happen, I'm not forcing anything, you know what I mean? So if it doesn't happen by the time I go to bed, you know, I'll just wait and pick it up back in the morning, you know? Yeah, Dave, I'll be posting it, man, as soon as it's all done. How does the DXY affect the JPY? So there isn't a huge correlation. What I like to do for the Japanese yen, Julio, is I follow the Japanese yen futures, which is 6J1 right here. So this is the Japanese yen futures, right? I talked about it last week, how, you know, we had this big area when we caught that UJ sell, that huge UJ sell. Japanese yen was down here creating a series of lows, and I was expecting price to run the lows, which it did, and then just take off. which it did. So that gave us that huge UJ and U Swiss franc sell-off last week, which was awesome. So you can see structure-wise, you know, what the yen is doing right now. We have failed to, you know, we're kind of like in the middle ground. We have failed to make a new lower low, but we haven't broken structure yet. You know, once the yen comes up and breaks structure there, then I would say the yen is now in a bullish, you know, bullish trend. But it's kind of just sitting consolidated. Remember, the yen is fairly weak right now. All right, just because of those negative interest rates. All right, so let's just get back to it. All right, CAD JPY. Let's see. This is what I had drawn up on CAD JPY. We'll go over it here. Hold on. Okay. What I would like to see, let's go to the 1 hour. Okay, so we have equal highs, right? Equal highs up here. There's lots of liquidity sitting here. We also have a daily, right? We have a daily imbalance off this candle, okay? The play I'm looking, yeah, but I'll trade CJ. I'll trade CJ on it. Yeah. And it's just because this trend is very clean, right? I mean, look, you can see the moves are very clean on CJ. So if it looks clean, I'll trade it, all right? What I am personally looking to do, and I hope that wasn't the move right there, because you can see right off of here, all we did was come and mitigate right back into this imbalance, okay? I'm hoping that's not the move. You know, if it is, no big deal. But what I'm personally looking at is, as long as and did we create equal highs? We did. Look at that. All right, so that kind of gives me some decent satisfaction. Okay, so we also have liquidity up here, all right? Now, as long as price does not break above here, if price takes out these highs, then I'm not even gonna worry about price coming back down to here, okay? But I would like to see price come back into this Sunday move, right? I want to see price come back down into this 1 hour and mitigate it. Stops are going to be just below here, so it's about a 27 pip stop. I think we might be able to get a little tighter stop, but hold on. So the only thing I don't like about this stop right here being here, you can see a lot of equal lows, right? So personally, I would say, how many pips is this? It's 8 pips. 8, 3. All right. I'm gonna leave the stop loss like this, just because those equal lows might get run. All right. But that's what I'm ideally looking for. I'm looking for price to return into this area right here, 76, like 289. I personally might take it off of 300, nice round number. All right. And use a 25 pip stop. That's the play I'm looking at. All right. You know, my first take profits would be in this area right here. Okay. That'd be a 7-to-1 ROI. and then obviously getting up into this imbalance range up here, okay? But that would ultimately be my first take profit areas, all right? I'll send this out. I've got my alert set for that one. All right, so NU. I know we got a bunch of new people on here. So on NU, right, I've been looking for sells on NU for a while. And again, the reason I'm looking for sells on NU, right, would be this. So let's go to a line chart, right? So NU and AU are benchmarks, right? They're benchmarks. So if I put AU and then I put NZD USD, let's make the Kiwi orange. Oh, come on. Why is TradingView acting up? All right, I'll put that candles and then I'll put NU on the line chart. All right. Okay, so I was looking for sells in this area here, right? Especially for everybody new. So these are benchmarks, right? They're supposed to move. Let me kind of make it a little tighter for you. Okay, they're supposed to move in unison, right? The NU and the AU against the dollar, all right? But you can see here, all right, last week I was selling AU because of this. So you can see that AU made a higher high, where NU made a lower low, right? At the same area, okay? So when benchmarks, if this is making the, if this is, so what I'm trying to explain is this is the leader and this is the laggard, right? When it comes to the actual terminology of it. So at a high, the one that's making the lower low is leading the benchmark. So that's giving you that that indication that it's going, that these are going to drop, all right? And you can ultimately see that's what happened, right? We did drop 233 pips, all right? Now, if it happens at the bottom, right? If it happens at the bottom where AU was making a higher high, okay, and NU was making a lower low at the bottom, we would buy it up because that's giving us that indication that the leader is showing that we are going to go up, all right? So hopefully that kind of gives you a little understanding of using the benchmarks. Like I use I use gold and silver as benchmarks. I don't trade silver, but I use it as a benchmark. The indices are another great one I use. So with NU, what I am looking for on NU, I am looking to take it lower, right? I am looking to take it lower. One of the things I am personally looking at on the 1 hour, this is the last, let's see, is the 4 hour? Let me see the 30 minute. All right, so there's this imbalance up here, but I do want to see. I think I like the 30 minute better. I do want to see if price can get up. No, there's no, for me, I mean, I don't know what you mean by dominant benchmark. They could be, whichever one is the leader at that time would be the dominant, maybe, I guess is what you're trying to ask, Julio. But there's a leader and then the rest are laggards. So the New Zealand, right, was the leader last week. That's why we decided, or I sent out the chart that I was selling AU and NU. You know, that's why I'm still looking at taking prices a little lower. You know, but I don't see a huge drop on NU until next week. So what I'm personally looking at, right, I'm bearish temporarily on the dollar, which is going to give us that bias for this to come up. And if we can come up into this last up close candle that has yet to be mitigated out of, right, I would like to take a trade off of here and then take it down, okay? I'm hoping this doesn't happen like on Friday. I'm hoping this has some, this happens going into like next week, but this is kind of my outlook, what I'm looking at, all right? I'm not interested in buying it up. I'm more interested in selling it down, okay? But that's what I'm looking at for NU and AU as well. NU is a little cleaner. AU has been mitigated, right? So you can see, look, AU has been mitigated out. Okay, you can see price dropped and then came back into it, where NU hasn't, right? You can see NU hasn't been mitigated out of it. So I'm more interested in NU. I can get the better entry on NU. So that's ultimately what I'm looking for. And the play would be something along these lines like this, right? I would be looking it's off the 30-minute, that's why. Yeah, if I can catch this off of a 7, and you've got a little bigger spread, so say like an 8 pip. If I can land that off of an 8 pip entry, you know, I'll start to look for some targets, but ultimately it would be back down to like the lows, maybe like these lows right here, something along those lines. So that's ideally something I'm going to be looking for in NU. All right. It's nowhere near price. I mean, it's not even, it's like 53 pips. I'll send this out just so you guys can have your eyes on it. But like, I don't even have targets on it yet. I want to kind of see how, you know, when we decide to pull away. If we just start to come back up now, then obviously my targets would be, you know, right around this area right here where there's that imbalance in here, and then obviously below it, and then getting into this 4-hour candle imbalance. Okay. AJ is the last one I'm looking at. So the scanner actually had a sell on AJ, and I kind of like it, but I think the entry is going to pop up a little higher. We'll let it open up here. Oh, for the love. Here we go. Let's see if it's still on here. So there was a 1-hour bat or a crab on AJ. There it is, it's a crab. All right, so you can see, I mean, it's definitely, it's met Manny's criteria for the sell on it. I think we're gonna come up higher. I think this move is just to entice people to get into it. If it doesn't, no big deal. I mean, I just see these areas up here, right? These areas, all this liquidity sitting up here. that's great. If it doesn't go up higher, I'm not too worried about it. But what I am interested is buying it up into there if we don't take those highs. All right. I've got my area set right here. Okay. There is this area here as well. So these are the two areas I'm going to be looking for. Is that one on each one? Yeah, bam. All right. So these are the two areas I'm going to be looking at. Ideally, I would love to take it off this bottom one. Let me find my risk. All right, so 5 minute. 5 minute risk is there. Let's see the 1 minute. Oh, 1 minute's the same. All right, so that's my 5 minute stop loss. Yeah, so I'm gonna be, that's gonna be my targets up here. So 21 pips, that's what the risk has got to be. And there is a 5 minute imbalance way back in here. That's going to be my ultimate targets. You know, even if you just want to take it back up to these highs, that's a 11.9 to 1 ROI. Let's see where 50% of this candle sits. All right, so 1% I'm going to do on that, and then the other percent is going to go here. All right. Okay, so these are the setups that I am looking at, and if you just put a straight fib from high to low, that's coming in between my three numbers I like to trade off of, 61, 71, and 78.6. All right. So this is what I am looking at for AJ. All right, and then I'm not interested in gold, and I'm definitely not trading oil, but we'll talk about the indices here, right? Let's see. You know what we'll do? Let's see, Julio. So Julio, what's your thought process on this? Where are you looking for entry? Mitigate the imbalance. What, up here at the yellow? That's where you're looking? Okay. All right, let's see. What do I see? Another 15. All right. Man, that's a beautiful daily closure. I love it. Let's see. So 4 hour. Yeah, I mean, just look at price action on the 4 hour, right? We have engulfed, right? We had our essentially we had our doji hammer closure, engulfing candle, engulfed that. Now on the 4 hour, right? On the 4 hour, remember everything's fractal, so everything has to mitigate. So you can see that this candle, this 4 hour candle has been mitigated, right? This 4 hour candle has been mitigated. Let's look at the 1 hour. Do we have anything on the 1 hour? I mean, there's a small little glimpse of imbalance here, but right, remember it only needs to be 50%, and that went 80%. At least it looks 80%. Yeah, 80%, all right? So that would have been a perfect entry right there on the NAS on the 1 hour. Let's see the 30 minutes. Label this here. All right, Matt, have a good one, bro. So when you start to see, just price action wise, right? When we start to see this, and this was probably during the power hour, right? 3 o'clock, 3:30, yep. So when you start to see this, all right, these are during that 3 to 4 o'clock, the last hour of equities trading is, the reason they call it the power hour is because there's a huge struggle. And you can see that the bulls tried to come in to put in some orders and they were just immediately just slapped down. The fact that these had such huge candle wicks to the upside, but couldn't even close with a bull candle, tell me that this was all, you know, some smaller money was trying to get in to buy it up at these lows, and some big orders just came in and just slapped them down. All right. And ultimately you can see we just mitigated, but on the 1 hour, we made some nice equal lows. So a couple of things that I look for, especially on the indices, because it's easy to make some good profits on the indices. The first question I need to find out is where's the money, right? Where are the money? So you can see here, we knew where the money was. That's why I knew the price was going to sell down there, all right? So where is the money, right? So we know that the money is sitting up here or down here for orders, right? So these are definitely going to be some targets for us. Julio threw his fib in there. So let's just see. So on his fib, all right, there's the fibs, right? So when I like to trade, I personally like to get some Walmart or Kmart blue light special pricing, right? So I like these 3 fib ratios, right? Those are my favorite fib ratios. So on the 30 minute, let's see what the 15 looks like. All right, so we do have a 30 minute imbalance right here. Um, 30 minute, let's go to 15. All right, so remember, this has been mitigated out of, this has been mitigated out of, do we have a last up close candle? Yep, I'll take a look at it, man. Let's see. Aha, all right. So we do have, this is a nice, let's just see if I can find another up close candle on that. Give me a second. All right, so we do have that on the 1 hour, right? Okay, so potential sponsor candle there. Let's just see what the 4 hour, nope. 1 hour, let's look at the 2, nope. 15, nope. 5, ooh, maybe the 5. No, it's been mitigated out, right? So this is all I'm looking for. When I'm looking at for trade setups, I'm looking what's been mitigated out of, right? So on the 5 minute, right, this candle right here was the last up candle. You can see if I put a fib on it, all right, it's been mitigated out of. Price came down, came back, mitigated out of that position, right? So this has been mitigated out of. So the last time frame that I can find is the 1 hour, right? The 1 hour. So I personally want to see price come back to 50%, which lines up exactly off the 71. All right. Yep. Have a good one, man. Good night. So I potentially would like to see, now I'm not buying this up, right? I'm not buying it up, but I would like to see price return 50% of this candle to mitigate out of it, which lines up 50%, which lines up with my 71, which lines up with a 30-minute imbalance. All right. So when I'm kind of building my area of confluence or my checklist for my trades, okay, a couple of things I'm doing are just that. All right. What do I have? Right. What do I have? Well, I have last up close candle needs to be mitigated out of. Check. 50% of that candle, right, lines up with the 71. Check. Lines up perfectly with an imbalance off the 30-minute. Check. All right. I got 3 checks. That's good enough for me. I'll be looking for that and something off of along the lines of like this with the NAS, right? So I'll be looking. Let's bring that bad boy up here. All right, stop loss at the open close of the candle. All right. And then I'll be looking to target, right? We don't need the fib anymore. Can delete these. All right. So I'll be looking to target some more inefficiencies, right? Now, what do we see for inefficiencies? Well, that's target all day long right there. All right. You can, I mean, just looking at that, we got money, right? Where's the money at? Money's sitting right there. All right. So we got money sitting here. We have money sitting here. I mean, that would be a 16-to-1 ROI. All right. No, I'm not going to set a sell limit there. I'm going to, I mean, well, here's the thing. If I go to bed tonight, I may put just a 1% risk on it. I don't think we're going to bounce up that high. What I'm expecting is that spike up, right, during a 9:30 open or something like that. Yep, perfect, exactly, Victor. I'm looking for that spike up. And what I mean by that is I'll give you an idea. I'll show you not what happened today, but what happened yesterday was a perfect entry, right, on US 30. But yeah, so I'm looking at something like that. I want to target these lows right here. And the fact that on the 15-minute those lows are looking like that, that's what I'm looking for tomorrow. Bam. And if that happens, I mean, I might be done sooner than later. I'll tell you, one of the things, if I can give everybody some advice, and this took a lot from me as well. I mean, for those of you that have been trading with me for the last year, I mean, you'll know, I used to go through all of these pairs, right? I used to have a setup for every pair. Now I'm just only looking at the good, the really nice setups, because I'll tell you right now, if I get this trade tomorrow, if this happens at 9:30 and by 12 o'clock we're down here, I'm done trading for the day, because I've made 16 on a 1% risk. I made 16%. I'm done. There's no even reason to look at anything else. Okay. Here, let's look at this real quick. All right. So on US 30, yep. You know what? Let's take a look at it. That might be pretty close. On the 5-minute, we'll look at the 5-minute, 22.97. Hold on, let's see. All right, so on 30, US 30. And what I was talking about, let's see, so today's the 7th, the 6th. Yeah, right here. All right. So this is what I was talking about, a perfect entry, right? So this was 2 days ago. This is what I caught in the morning, right? And I'll backtrack it real quick, just give you guys a little more. Okay. So this is 8:30. This is the 8:30 candle. Okay. I wanted to see price run these lows. Okay. I want to see price at 9:30 drop here and then see how we were going to move, right? So you could see, bam, that's 9:30. 9 o'clock into 9:15. Equities open, right? 9:30 candle. Now I'm not getting in the trade yet, all right? What I am doing is I'm seeing if we move away from this area, right? You can see that willingness to move away from the area. So from there, all I do is find some areas of imbalance, right? Here off the 5-minute, this is something I may want to see if price can come back down into, all right? And then off the 1-minute, what do we have? Well, off the 1-minute, we have this right here, okay? So that's something that I would be looking at to get into. Entry in here, our stop loss, right? Stop loss doesn't have to be anything lower than here. So that would be my stop loss right there, okay? And then my targets could be whatever, you know, these equal highs sitting up here would be the equal highs that I'd be targeting, okay? Something like that, all right? It took forever to come back, but oh, you know what? I'm on the 1-minute, hold on. Let's go to a 5-minute. Oh, you know what? Did I miss the move? Was it here? Yeah, it was here. My bad. Hold on. When I moved the time frames, I jacked it up. So here was the play. All right. Let me just exit out of it. Here was the play. I knew it mitigated off of that. All right. That was the imbalance I wanted, that I got in on, right? Price came and moved swiftly away from it. So I just found what the risk was. So as price was doing that, here we go. All right. So you can see that was the 5-minute, and the 1-minute was right here. All right, right there. Okay, there's the 1-minute imbalance, as small as it is right there. Okay, obviously I went off the 5-minute, but our risk, right? You can see everything's been mitigated here. So really, the only thing I needed to do when there's no mitigation like that, all I do. Well, what's 50% of this last down candle is right here, right? So typically I use the, let me use the 80%. Let me go the other way. Okay, so my stop loss is right there off the 1-minute. And this was the move, the only move I caught, the only trade I took that day, because my internet was down most of the day, but, right? Off the 5-minute, that was it. Here was the entry. Here's the stop loss, right? So it was 34 points is what I was looking for. And my targets, right, were to take these equal highs up here. All right, those are my targets, okay? So this was an 18-to-1 ROI. And realistically, it took an hour and 15 minutes, all right? So that's all I took. I mean, yeah, I could have held it for longer, but there was no reason to, you know, I didn't need to. All right, so let's look at what it's doing now. Yeah, so all my targets were out. Let's see. Man, this was a beautiful setup right there. Okay, so let me see what I see first, and then we'll take a look at it. All right, so what we have done now, unlike NAS, right, we don't have equal lows. This has taken the low, all right. So what I do want to see, okay, that's been mitigated out. Let's go to a 4-hour real quick. So on the 4-hour, right, this price action tells you that we are coming down, right? You have Dragonfly Doji, you have a beautiful engulfing that engulfs the previous two bull candles. Now on the 4-hour, we haven't mitigated 50%, right? We haven't, all right? So this is 50%. 50% of the H4. It did? Let's see. Yeah, no. I personally don't use Head and Shoulders. I don't put a lot of, the way, again, I look at it is who developed these Head and Shoulders patterns, right? Who put it out there? And, you know, it's great and all, and it works a good percentage of the time that a lot of people put faith in it. The problem with the Head and Shoulders pattern is if you are a trader on the desk at Chase Bank and you want to take, in order for you to make money, you need to take sellers out of the market, right? Why would you allow this right here, okay, to sell down? So you may allow this to come here, but I guarantee you the minute price comes into like this area here, okay, people that don't take profits, you'll just run the price up and have to mitigate what you need to mitigate out of, all right? So that's the 50% of the H4, right? On the H1, we have mitigated out, okay? We do have, on the 1 hour, we do have this right here. That's on the H1. Let's see. And that potentially could be the mitigation candle. Let's see. It's the 1 hour. All right, so I'm just gonna mark this up like this for a second. All right. That's been mitigated. All right, yours was on the 5-minute, right? What, let's see.
Yeah, it just seemed like a clean bull candle on 5 minutes.
Where was it at? 22,973. 22,973. Oh,
it's on your 50% of H4.
Oh, it's on the 50% here? No, I think we're gonna go higher.
Okay.
Yeah, and the only reason we're gonna go higher, so here, just follow along, right? Because this is how I started to look at it. So on the here, we'll just go from the smallest time frame and work up. All right. So we know that this was played out, right? Do we see any last up close candles that haven't mitigated? So this last up, right, been mitigated. This last was mitigated, right? So if we put like a fib on it, right, you can see right to 50%. This one here may still be in play on the 1 minute. I'm going to put that there. We're going to see. All right. So that one's still in play. let's go to the 5 minute. All right, on the 5 minute. All right, so the 5 minute, that's there. So on the 5 minute, right, this last has been mitigated out, right? You can see this candle here took out that 50%, so that's been mitigated out. This is all there. Let's see. 15 is done. 30 minute is done. Yeah, 30 minute is done. Where's that 1 hour? 1 hour. So the 1 hour time frame still hasn't been mitigated out of, and the 1 minute hasn't been mitigated out of. But that 1 minute, how many points are we talking here, man? 10 points. 10 points, and then, all right, so there's 2 plays, right? So the 1 minute and then the 1 hour are the 2 time frames that haven't been mitigated out yet. What the heck is it? So let's just see what lines up. So swing high to swing low. At 50%. So this is kind of things I look at, right? So 50%, the 50% lines up with the 786, right? So I got check on the 786, check on 50% of this last up close candle. What I personally may do, because that we're only talking about 10 extra points, I may take the stop loss to the top of the wick, right? Because the top of the wick would be the same stop loss that I would need for that 80%. So that's how I would play it. Now, what I may do is, right, one position off 50%, or that 786 position is 1%. And if I really want to get crazy, let's see. So stop loss would be, I'm going to give it the extra 10 points, right, to cover to the top of that wick, just so that I can cover this 1 minute. My risk has to be off that 1 minute. And then, you know, what are my targets? Well, depending on what happens tonight, right? If potentially we still have a small 1 hour imbalance there, we definitely have this here, right? We have some nice lows right in here. So that would be, you know, I'd be targeting at least back down to here. You know, if we can get down here, that's great. You know, I mean, that's a 16-1. But what I may do, and this is sometimes when you guys see, you know, like I make 37% in one day, it's because I do take that 1% risk. I do take that 1% risk, and I'll take it off of this sucker right here. I'll do 1%, crunch that stop loss to 12 points. You know, even, I mean, worst case scenario, what happens, right? I lose 1%, you know? All right, no big deal. So on a $1,500 account, I will lose $13 and what? 30 cents, all right? But let's just see what this ROI would be. Let's just see. So if we just take it to where it is, that the low that it created today would be an 82-1 ROI.
Wow.
So I will risk 1% of my account. I don't mind doing it. I will risk 1% of my account for that. Because even if I get stopped out, it's only 1%. Who cares? You know? But yeah, that right there, that's how you can crunch. And now, if it doesn't happen, it doesn't happen, you know. But that's why I'll do 1% risk here, 1% risk here. Even if this one is the only one that goes, if I take it right back down to this imbalance here, I mean, that's still an 11-1. My daily goal is 5%. You know, I don't remember the last time I got 5%, but you know, that's my daily goal. So.
Yeah, last Tuesday as well too. They ran the market up because the numbers were come out on Wednesday morning, just so they could write it down.
Yep. Yes, 100%. That's what I was saying in our chat. I was like, this is just manipulation. This is the market enticing buyers, and you know, because FOMO is real, man. FOMO is real. You know, people. Yeah, Gary. Yeah. So let's see. You had hold on, let me catch up. Vic, you had an 8-point stop loss in US 30. What was the final ROI you had yesterday? It sucked. I'll tell you, man. Yesterday sucked. My internet was down most of the day, and I have Sprint, and it sucks out here. So I was not a fan of trying to trade on a horrible service.
Yeah, I did like 45 to 1 yesterday.
You're welcome, bro. You're welcome for getting you into that.
Yeah, man. Always appreciate it.
So here's the theory, right? I personally don't think that on US 30 this is going to come up 775 points overnight. I mean, we did last night, 100. Yeah, we did last night. We rallied last night. If it does, great. I personally think we're going to get back maybe up to this H4 area, and then maybe tomorrow morning at 9:30 open, we're going to spike up, and then right around that lunchtime reversal that I always call out is where we're going to start. I'd like to potentially maybe get 12 o'clock area into here, and then we're just going to sell off the rest of the day. I mean, it's up to you. Me personally, I'm not going to set a limit order on it. You know, and the reason is because while I'm sleeping, what happens if somebody comes out and says we have a cure for the coronavirus, you know, and we get that 400-point spike up and then it drops? You know, I would rather like to see price actually get in there. I mean, I'll definitely set an alert, but I think we're going to be up here at this 50% of the H4, maybe going into like London and then go from there, you know? Yeah, but even a tweet, I mean, I don't know, the volatility swings, and that's the whole thing. I mean, the swings where we're getting 1,000-point moves aren't normal, you know? So, you know, I'll just wait. You know, worst case scenario, if this happens while I'm sleeping, I'll just get into the trade, you know, on another move. You know, I'll wait for that 15-minute candle, right? I'll wait for that 15-minute candle and just catch it off the 15-minute candle and write it down, you know? But that's what I'm seeing on US 30. I tell you right now, I am going to put a 1% on that 1 minute imbalance. You guys will know if it happens, because 85% of that large account will definitely be nice. So yeah. Oh, I know. Tell me about it. That's once we do get back to normal and the Dow only moves 300 points a day, I don't know what I'm going to do with myself. I'm going to have to actually start trading multiple times. Yeah. No, bud, your account would know. Trust me. My account, my broker may drop me. You know, the IRS may be coming looking for me. We'll see. We'll see. All right, and then let's look at SPX, man. Let's look at the S&P. Kind of the same thing that I'm looking at. Let's see. Let's delete all of this. Hopefully, definitely you guys are starting to see this. Like I said, man, I've traded so many different strategies. I mean, I was successful with a lot, but this by far allows me to crunch the ROIs, you know, where before I would only get like a 2-to-1. you know, a 3-to-1. I don't remember the last time I traded a 2 or 3-to-1 ROI. You know, most of the time, it's, you know, like you see, it's ridiculous. All right, so let's do the same thing. Let me go to the 1 minute because that's where on the US 30 we had the last mitigation point. All right, so you see on S&P, right? This candle has been mitigated out of, right? This candle has been mitigated out of. So this is the candle here that needs to be mitigated out of. And just to add, you know, like a little bit of advice to everybody, don't be afraid to take losses. All right. I've lost more trades in the month of March than I have won. Okay. Now, granted, I'm only maybe taking 3 trades a day and I lose like 2 of them, but that one trade that I get that goes 30 for 1 makes up for the 2% I lost. All right. Hey, no worries, Dave. Have a good one, man. Let's see. All right. So on the 1 minute, that's got to be mitigated, right? And trust me, especially for newer folks here, you'll learn it. All right. I started trading. The first time I actually looked at TradingView on a chart, all right, was February 1st, 2019. So I'm only like almost 14 months into this. Okay. All right. So on the 5 minute, I think this has to get mitigated out. Yeah. All right. So we need to mitigate out of this on the 5. That's the 30. See this 4-hour candle. Yeah, here's that 4-hour candle. My dog is snoring on the floor next to me. All right, so there's 2 plays that need to happen. Let's see. Bam to bam. All right, so we have a fib. So I think I'm going to do the same thing on S&P that I did on the Dow. That 1 minute's been mitigated, but there's a 5 minute that needs to be mitigated out. So I would like to take. We're only talking about a 1 3/4 point difference between the 50 and the 78.6. So I will take that entry off that 50% there. Okay. And my stop loss, will go I don't know where so stop loss would go right there. All right, so it's a 17-point stop loss on S&P. All right, and again, just taking it right back down, you're looking at a 5 to 1. I would personally be looking at these areas here. This area right here is a key area that I'm looking at, and then I mean we've got these huge areas down here as well. All right. But just taking it right back to 0 is 5.81. And then, of course, if you got a smaller account, just do 1% on that one and then do 1% off of that. Okay. Oh, wrong one. Hold on. There we go. So you're looking at about a 3.5 point stop loss off this 5-minute imbalance. And just taking it down to here would be a 32 to 1. So, you know, worst case scenario, it doesn't come up here. You're still going to secure, you know, almost 6%. If it does over there, you know what? You can buy me a Starbucks when we get out of quarantine. But that's what I'm looking at for those two. All right. And then, of course, I personally think that we're going to come down into this here. But we'll see how it plays out. That's what I'm looking at. All right. So who's got something they want to look at? Or I'm also going to take a look at the scanner and just see if there's anything. What's that second entry? The second entry is go to the 5-minute. Right, and the entry is right here, 27.42 in gray. Stop loss 27.45.4. But if you go to the 5-minute, oh, hold on, I got the wheel of death. And make sure my internet doesn't go down. All right, here we go. So you can see this 5-minute candle right here. Okay, that 5-minute candle, it's the last up candle that has not been mitigated out of. And then, yeah, it's right here, 27.42.2. Stop loss is 27.45.4. No, 50%. 50% is that. And then the stop loss is the open and close, the top of the candle body. All right. That's going to be the stop loss for both positions, just in case price comes up here. All right. Yeah, that's what I got in S&P. So we'll see. You know, like I said, it's a numbers game. You know, don't be afraid to take the loss. You know, like I said, don't and trust me. My first 3 accounts I blew, right? Because I was like, oh, you know, it's going to turn around on me. Let me just close it. You know, let me hold the drawdown a little longer. You know, I learned very quickly. I hate drawdown. I hate red numbers on my MT4. I would rather take, you know, a very small loss, you know, on a $1,500 account. If you lose this trade, right, on a $1,500 account, you're going to lose $14. You know, I could care less. I'll give up $14 on a $1,500 account for the opportunity to make $449.20 off of this move right here, and then some. All right. Like I said, just let it sink in, right? I have lost, and you guys know I don't take many losses, right? I think I overall in my entire trading career, I'm sitting somewhere at like 86%. In the month of March, I'm actually 50. I'd have to look it up, but I think it was like 58%. Is my winning percentage. All right. But when I lose a trade, now granted, I take a lot more losses because I'm twin trading, right? So the one trade that I lose is actually 2 trades that I've lost, but it's one setup, you know. And then sometimes on my wins, you know, I don't, when I twin trade, it doesn't activate the second order, so it's kind of it's misskewed. But like I said, I have lost more trades this month than I have won them. However, my ROI and my profitability is still way up there. Okay, and it's because I'm catching these nice moves. Hold on, let me see that. Yep, exactly. Lose small, break even, win small, win big. Absolutely. A perfect example, that EuroCAD trade today that went out. When I sent it out, you know, entry was where was it? Entry was here, right? And I sent it out in the group chat. Where did I send it out in the group chat? Let's see. Yeah, I sent it out in the group chat right here. Price has gone positive 29 points. I'm moving my entries to break even, right? This was the chart. And I don't have a problem doing it. Here was the chart, right? Perfect entry, price was plus 29 pips. At 25 pips, I go to break even. Both of my orders were activated. All right. I protected it. It came, what did it go? It went 30 pips before going negative 24, before going up 60 pips, before coming down another 35, and then it's just kind of been sideways. So I broke even. I didn't lose any money. I didn't make any money. But you know what? I'm fine with it because this is trash. I don't, this doesn't know what the heck it wants to do. How long did it take seeing profit consistently? So, Gary, it took me, I started with IM February of 2019. Probably around May 2019 is when I finally started to make consistent profits where, like I wouldn't make $100 today, lose $60 tomorrow, make $40 today, lose $80 the next day. Where I was actually building my account was like end of May. It was like Memorial weekend. After that, that's when I started really getting a handle on the mindset part. And then I would say maybe like the summertime is when I started incorporating break and retest, the break and retest strategy. And I was really consistent with it. I was making, back everybody that was in our trade ideas group, I would post the weekly outlook. We were catching like 20% a week, 20-25% profits a week. And honestly, I thought that was awesome. I remember one week it was like 38%. And I was so stoked. I was like, man, this is awesome. And then obviously it wasn't until probably Thanksgiving when I really turned in, I started looking at the smart money concepts and following the Trade House. And you can start to see a lot of the other educators have done it. Lex Waves has really started to do it. Abel Melendez is starting to look at smart money. There's a lot of other educators that have really jumped on the smart money concept, and it's for a reason. I can lose more trades, but I mean, where I used to be happy for 30% in a week, I'm getting 30% in, I think today was 15 minutes. So, that kind of gives you an idea, but the consistency came with, the time I invested in it. I was fortunate enough to be a cop at the time. And, I was, if you ever drove down the street and you saw that cop underneath the oak tree with his overhead lights on and looking at a computer, that was me watching Go Live and learning how to trade. So, I was able to at least give an entire shift, 8, 9, 10 hours a day to really, mastering this skill. And I mean, I'm still learning. I still learn something every day. I still watch, 3 or 4 hours of Go Live a day. Not every day, but, I watch Lex Waves every morning at 8. I watch the Power Hour with Zach and Jordan Morgan at 3 on Monday, Tuesday, Wednesday, and Fridays. I do their Go Live indices on Tuesday, Wednesday, Thursdays. Every now and then I'll catch a Zach McDonald, on Tuesday, Wednesday, Thursday. I definitely invest the time into understanding it, let me see, I'm catching up here. Yeah, no, I mean, and honestly, Bonnie, one of the things I've done to really help with the mindset of understanding the stop loss stuff, I mean, just like you see me, I go down and I find my risk, if price, like when you see me go down to a 1 minute, I'm like, all right, if price, there's no reason for price to go below here. If price breaks that, you know what that tells me? That it tells me that we're going down. We're not coming back up, Now, sure, price can come down, break, and then obviously it needs to pull back and you can hedge out of it. But I would rather just take the loss here and not have to worry about hedging out and stuff like that, It's just simpler. And that's really what helped, as far as the mindset goes. Let's see. Yeah, don't worry about it, Gary, man. It's all good. I don't mind doing it. If I can help people, go through stuff a little easier, it's worth it. So many calls going on. Got to jump in another one. Amazing job. All right. Sounds good, man. Have a good one. Yep. Listen, Bonnie, I still learn something every day. You know, there's little things that I fine tune, and you know, it is what it is, man. It is what it is. Yeah, Mike, listen, my internet's still jacked up. Yesterday, the entire day was down. So, and I called Comcast and they can't provide service to me. So I don't know what to tell you. All right. So does anybody, let me check DXY real quick here. Anybody got anything else they want to look at? Yeah. So you can see, right, since we've been on, DXY has kind of just been sitting here, right? I'm just going to keep an eye on it. You know, if we start to see that movement down, I'm going to go, yeah, surf off my phone. You get out of here, bro. There's no way. There's no way. You know how many TVs and streaming and all this stuff that with all 4 kids and everything, there's no way I'm going to be able to, Verizon's going to be able to keep up with that, man. Oh, just for trading? Yeah, well, I mean, I could. I don't know. I do it off my – that's what I ended up doing today. But we'll see, man. We'll see. You use your phone? You have no internet? Oh, yeah. No. I need to. I need to. Yeah, Sprint's horrible, man. Sprint's horrible. So anything else? Anybody got anything else they want to look at, go over? I mean, I know I threw a lot of charts out there, a lot of stuff I'm looking at. You know, you don't have to trade all the time. And just remember, once you get to a decent account size, right? Like I said, it took me less than a year to hit 6 figures. And it's going to take less than 2 years to hit 7 figures. So, you know, once you get up there, I mean, you don't have to trade as much. You know, I mean, you see Manny's done in an hour sometimes. He's done in 15 minutes, you know. I definitely get, you know, I go for a little more than he does. You know, he's happy with 2, 3, 4%, and he's happy. And you can do that when you have a over 6-figure account. You know, a couple thousand a day is all you really need. You know, me on the other hand, I'm not looking. I honestly don't even know dollar-wise what I make sometimes. It's all percentages. That's all I care about is the percentage. So, yeah, no, I'm not. I don't even care about gold right now. There's the spreads are just outrageous. GJ, do you have something particular on GJ? All right, Julio, good man. Yeah. Hopefully, I definitely gave you some stuff. So the last time I looked at GJ was last week, right? And we caught a couple buys up here. But I mean, you can just see the next move I was looking for was I wanted price to come up and break a new high. And it's just been sideways for 2 weeks, for 12 days. It has been just sideways. And I don't like to trade ranges, you know. Ranges give people false hope, and it's no point in me trying to lose money. I would say that if GJ can break out of this range, right? So like sometimes what I do is I just box it in. Right, I box it in, and I would look for either a break and then retest that range down, or break, retest down. But to me, you know, trading it like that, you're not going to get nice ROIs. You know, you're going to get like a 2-to-1, a 3-to-1 ROI. You know, I'm not big on that. All right, sounds good, Bonnie. Have a good one. Enjoy. Hopefully you got some value out of it. You know. Yeah, me personally, I don't see anything worthy of a trade on it. So, anything else? Anybody got anything else they're looking at? I mean, like I said, I gave a bunch of them out. We got some good setups. The indices, if these play out, I mean, that's really the only thing you gotta trade is that one. I mean, heck, what was that 84-to-1 ROI? I mean, that's ridiculous. Yeah, so awesome. Well, if you guys don't have anything else, man, I'm gonna call it a night. Enjoy. If there's anything, hit me up in the chat, man. I'll be out there. So enjoy, have a good night, and I'll see you guys later. I'll post this in the once it's done.